Good afternoon to everyone. Thanks very much for your time this afternoon and for joining. So yeah, I'm going to give a 30-minute presentation about Foresight Sustainable Forestry Company PLC. I'll cover the sectors that the fund is invested in and why we think that's interesting, and I will give you a flavour of some of the activities and attractions of the investment trust as we go through, and we've got some case studies of some underlying investments as well. I'll just move on to the next slide. By way of introduction, yeah, I'm the co-founder and co-lead fund manager for Foresight Sustainable Forestry, which along with Robert Guest, we IPO'd on the London Stock Exchange nearly 2 years ago now. I've got over 16 years experience in finance, and I've been solely focused within Foresight on natural capital and forestry for the last 5 years. Prior to that, within Foresight, I've originated and launched 4 other sustainable infrastructure strategies that have gone on to attract about $1.5 billion of external investment. So why UK forestry and afforestation? I think, and why now? I think if we look at globally, there is a shortage in the supply of sustainable timber. At the current time, the World Bank believe there's about 1 billion cubic meters of supply deficit, and that by 2050, given increases in demand and a rising population, that supply deficit is forecast to more than triple. So that's at a global level. But in the UK, that situation is really amplified. The UK is sadly one of Europe's least forested countries. We only have about 13% forest cover, canopy cover, versus an average of about 47-48% across the rest of Europe. And so as a result, in the UK, we import over 80% of all timber that is consumed domestically. So that is a long-term structural imbalance, and it creates a compelling capital appreciation opportunity. And that is because we can plant all of the trees that we like in the UK today, but it literally takes 35 to 40 years before those trees reach maturity for harvesting and can contribute to that, decreasing that structural supply imbalance. Forestry generally has historically had inflation-beating characteristics and low and negative correlations to traditional asset classes such as equities and bonds. So from that perspective, having UK and forestry as part of your asset allocation is a good thing to do for portfolio diversification reasons. And I think the key kind of appeal of forestry and sustainable timber production is its inherent sustainability credentials. Timber is arguably one of the most sustainable materials on the planet. It's inherently carbon negative, and when it's used as an alternative to more fossil fuel intensive materials like steel, aluminium, and cement, there are significant carbon benefits to its use. So that's why forestry and afforestation in the UK, but why now? And I think that really boils down to the global recognition of the climate change and biodiversity emergency that we are in. And related to that, we have seen a very rapid expansion of high integrity corporate net zero pledges. So this is where a company says, we're going to be net zero by 2050. And a key part of that is that these companies will only be able to achieve that in part by purchasing and retiring voluntary carbon credits. And I'll talk a bit later about what those are. But demand for these carbon credits that one can receive when establishing a new forest is forecast to increase by about 100-fold by 2050. Also in the UK, in terms of timing, there are national tree planting targets, and we're well behind target. So there are very generous grants and increasingly generous grants that are available to incentivize forestation. And finally, as a result of Brexit, the rural economy is undergoing a complete transformation. Brexit has seen or is seeing the complete phase out of the basic payment scheme, which is the main subsidy for farming, and it's being replaced with ELMS, which incentivizes is a different type of subsidy. It incentivizes more sustainable farming practices, which is a good thing. But the total quantum of subsidy that will go to farmers in the future is fundamentally decreasing, and as a result, land use, farming land use, will need to transform quite significantly to adapt to that. In terms of Foresight, so Foresight Sustainable Forestry is managed by Foresight Group. We've been the manager since the IPO. We've got a long track record of delivering returns in forestry and natural capital. We've been investing in that space for 5 to 6 years now, and have a strong performance track record. Foresight also brings a proprietary pipeline of acquisition opportunities. So on the afforestation side, we have literally mapped all of the UK, overlaying a whole series of map-based criteria to identify 4,500 specific properties, farms typically, that we believe would be excellent candidates for afforestation. And we run a direct origination campaign where we specifically approach landowners about potentially purchasing those properties. We have a scalable business model, and in the last 2 years, we've deployed over £170 million into a portfolio of forestry and afforestation properties. And then I think the other key thing to mention just about the trust is its sustainability credentials. So all of the forests within the portfolio are managed to dual FSC and PEFC standards, which you'll probably recognise. FSC, that's the main certification that the forest has been managed to sustainable standards, and you see that logo used on various paper and wood product packaging. The fund itself also contributes very meaningfully to several UN Sustainable Development Goals, and I'll touch on that a bit later on. So, in terms of what is Foresight Sustainable Forestry, well, when it was IPO'd, as I say, nearly 2 years ago, it became the London Stock Exchange's first and to this day still only fund focused on UK forestry and natural capital. And the idea of the investment company is to offer investors direct and liquid access to the forestry asset class, which has historically had very high barriers to entry. We invest in a mixed portfolio of primarily afforestation assets. So afforestation just refers to where we take previously unplanted land, we develop it and establish a new commercial forest alongside existing commercial forests. But primarily the fund is focused on afforestation, and that is the engine room of returns and the fund's sustainable impact. We're targeting delivering a return of more than inflation plus 5%, and that's measured over any 5-year period. We're targeting, we're a total return fund, and we're targeting real asset-backed returns from the capital appreciation of the land that we're acquiring, and also from the creation of voluntary carbon credits, as well as from timber sales from the existing forestry assets in the portfolio. from a sustainability and ESG perspective, the fund makes a very direct contribution to the twin fights against both climate change and biodiversity loss, as well as delivering a series of very positive social outputs. And I'll touch on some of those a bit later. So the business model, I've talked about afforestation being the engine room of our returns. So the business model there, so up to 50% of the fund can be invested in afforestation assets at any one time. The business model is to acquire land with good potential for afforestation. We then have a development program where we look to secure planning permission, which you need to plant a new commercial forest, to secure grants from the government, and to register that scheme with the Woodland Carbon Code, which is the issuer and certifier of the amount of carbon that this new forest will sequester from the atmosphere. So we secure all of that, and then we physically plant these new forests. And then the forests enter a period of establishment for another 2 to 3 years. And once these young forests are then established, about 5 to 6, 7 years after original acquisition, we then look to sell these newly created young established forests and recycle the capital into future waves of afforestation. So the afforestation pot is a perpetual development part within the fund. Now that is supplemented by investments into established forests, and that is more of a buy and hold strategy. So we acquire these forests and we manage them on typically 35 to 40 year rotations, and sell the sustainable timber to generate an income for the company, and that income is helpful to supplement the afforestation side of the business, which is quite capital intensive. We also have some non-core assets, things like residential properties, farmhouses, that sort of thing. They're non-core to the strategy, but we are able to, they sometimes come with the land that we're acquiring. And our general strategy is generally to acquire them, but then subsequently dispose of them if they're not core to the property's underlying value. In terms of the portfolio, the fund now has 65 properties in the portfolio. 36 of those are afforestation properties, 25 are pure forestry properties, and 4 are mixed properties. So there's a mix of both existing standing forestry on these properties, as well as some afforestation potential. And that portfolio extends over nearly 12,000 hectares of land, so a significant area of land. In terms of where these properties are located, 85% of them by value are located in Scotland. Scotland is a highly afforested area, certainly when compared to England and Wales, and we see significant afforestation potential there. Wales is 10%, and then there's a couple of properties in England. In terms of the portfolio split by type, you can see the second donut chart there. There's an even mix of 42% by value is in afforestation properties, 42% is in forestry properties, and then 16% are in these mixed forestry afforestation properties. And then finally on this slide, the table at the bottom shows the status, breaks down the portfolio in terms of the status of development. So within a afforestation asset, there are broadly 3 stages. So development stage, which is where there are about 3,500 hectares at that status in the portfolio at the moment. These are properties where we've acquired the land, but we are working on securing the planning permission, the grant, and the Woodland Carbon Code registration for carbon credits. Once we have all 3 of those things, they enter the next stage, which is planting stage. So that is where we are in the process of physically planting and establishing these new forests. Once that is complete, it then enters the 3rd phase, which is establishment stage afforestation assets. and they would the properties would typically remain in that stage for, as I say, 2 to 3 years, whilst these young saplings are establishing. At the end of the 3 years, once these trees are well established, they then move into the established forestry assets bucket. And we started publishing this this table really to give investors a sense of where we are in the development cycle. In terms of progress to date, we're very proud that since we IPO'd, as I say, 2 years ago, we have physically planted 1.5 million trees across the portfolio at 6 newly created forests. And then in addition to that, we have a further 7.5 million trees, or 3,500 hectares of tree planting that we're aiming to undertake over the next 18 months. And that 4,000 hectares of tree planting is very significant in terms of the national context. It's equivalent to a third of the total amount of tree planting that was achieved across the entire UK last year. So yeah, a significant contribution to UK tree planting targets. So tree planting is a key part of what we're doing. In addition, on the harvesting front, we've sold about 6,500 tonnes of timber, sustainable timber, since IPO. Timber prices have been slightly softer since we launched, and so we do have about 117,000 tonnes of mature timber that is ready for harvesting. We have permits in place to commence harvesting at effectively a moment's notice, but we have actively decided to leave that timber on the stump. And any forest manager has the option to leave mature timber on the stump for a period of up to about 10 years. And during that period, we're able to cherry pick the moment when we want to bring the timber to market. So we can wait until timber prices, we believe, are at an optimum, and that's the moment then we proceed with harvesting. And that's one of the really attractive characteristics of forestry, which is quite unique, is that we can delay or accelerate harvesting depending on what's going on in the market. As I've mentioned, afforestation is the engine room of our returns, and reliably so. So this is, I mentioned that we had planted 6 afforestation properties since IPO. Those 6 properties were acquired for just shy of £10 million, so £9.8 million. As a result of having completed the planting of those properties and them having been de-risked, having received their planning permission, grants and carbon credits, those properties have, at the most recent valuation, have been valued at 19.5 million. So that's a near doubling in the value of those properties as a result of achieving that establishment milestone. And I think that's one of the key points of note for investors, is that we've reliably delivered this sort of near doubling of value on these first 6 afforestation properties, but we still have a further 34 afforestation properties in the pipeline, and we've said that we're expecting many of those to be planted by Easter next year. If we can, what I wanted to do now is just show a very quick video of just highlighting a case study of one of our afforestation sites in Wales, and also how we're working with the biodiversity
emergency. And forestry and new tree plantations like this are internationally recognised as playing a vital role in both fighting biodiversity loss and climate change. But it's not just about biodiversity and climate, it's about communities and people as well. And it's about ensuring that we're on a just transition. And that's why last year we launched the Foresight Sustainable Forestry Skills Training Programme. And this is a programme available to members of the local community who, during a fully funded 3-week period, will receive all of the training, skills, certifications, mentoring and safety equipment that they would need to commence a new career in forestry. And here up ahead is Tom, who's one of the first participants in last year's skills training programme. So let's go and talk to him to find out how he found it. Hi Tom.
Hi there.
So what made you apply for the skills training programme?
Oh, just to advance my forestry skills as much as I can. I've got a nice future ahead of me if I carry on, so the more help I get, the better, really, isn't it?
Yeah. And how did you find the 3 weeks?
Oh, amazing. Honestly, the chance that gets given in that course is unbelievable. The fact that you can get all those skills and have them given to you for free, it's unbelievable considering the amount of costs that are normally involved with achieving those courses.
And what was some of the more challenging parts?
Oh, definitely learning a chainsaw. Like, as much as you think it's going to be all fun and games, at the end of the day, it's a heavy piece of equipment, and it makes you realise how important it is for health and safety and to have the courses.
And have you used any of the skills that you picked up during the course after?
Oh, definitely, loads. So with the chainsaw, it's been a big help actually. It's allowed me to expand my work into thinning out work and to do cleaning work as well with the chainsaw, which you can't just do with a brush cutter. And but then again, you give me the brush cutter course as well and the clearing saw course whilst I was on the course. So they've been really useful as well, learning a few new tricks with the clearing saw.
That's great. And what's it meant for you personally?
Oh, loads, honestly. It just shows appreciation in the work line that you work for.
And you mentioned earlier that you hopefully about to sign up to a new lease on a house, which is exciting.
Yeah, can't wait for that.
Yeah.
That'll be amazing. Just right down from a bank farm as well, so be perfect for managing that as the trees begin to grow more.
That's brilliant. All right. Well, thanks very much for that.
No problem.
That's really helpful.
I would shake your hand, but then end up being brown.
All right. Thanks, Tom.
Hey, no problem.
We believe that the pilot of the skills training programme has been a huge success and made a real impact with local communities. And that's why we're really excited today to announce the significant expansion of the programme. We'll be increasing the number of places from 4 to 10 this year, and we'll also be increasing the geographic scope from just being in Wales to being in Wales and Scotland. We're enormously proud of the first cohort of the skills training programme candidates to have completed the programme and started work on some of our afforestation schemes. We're also hugely grateful to our partners Till Hill for collaborating on this programme. And it's through initiatives like this that we're ensuring that Foresight Sustainable Forestry is not just directly contributing to the fight against climate change and biodiversity loss, but it's working and collaborating with local people and communities.
So look, yeah, hopefully that video just gives viewers a sense, a visual on the sorts of properties that we're acquiring. You can see, it's typically pasture and hill grazing land in very rural parts of the countryside. And I was just saying that you can see there that every tree in the portfolio, the 1.5 million trees that we've planted so far are planted by hand. So it's highly labour intensive, and to plant all 9 million trees that we have in the pipeline for planting over the next 18 months will create about 700 local employment opportunities for members of the local community. So we're very much working with very closely with local communities. I think it's also worth touching on voluntary carbon credits. So the 9 million trees that we're developing and planting at the moment is on track to produce 1 million high integrity voluntary carbon credits. And so what that effectively, a voluntary carbon credit recognizes that as trees grow, they directly sequester and store carbon dioxide from the atmosphere, which is one of the greenhouse gases, the main greenhouse gas that we need to lower levels of in order to fight climate change. And so for every metric ton of carbon that's removed from the atmosphere, we receive 1 carbon credit is recognized. Now, the recognition of that comes through, there's a body called the Woodland Carbon Code, and they have a industry standard and methodology for calculating the amount of carbon that's sequestered, and they oversee and independently verify the levels of carbon that is sequestered. Now, these voluntary carbon credits, ultimately, they can be sold or distributed to companies And so any company who has made a net zero pledge, they will have to decarbonize their activities by 90 to 95%. But for the final 5 to 10% of emissions that are considered unavoidable or unabatable, these companies in time will have no choice but to purchase and retire voluntary carbon credits. And if we look at voluntary carbon markets, well, actually, if we just look at the profile of the million voluntary carbon credits, we can see that because we are planting fast-growing commercial forests, they do have a good proportion of slower-growing broadleaves. But because there's a focus on the commerciality of these fast-growing trees, about 75% of these credits will have matured and be capable of retirement by corporates by 2050, which is the key year that we're globally aiming for net zero by. And that really is just underpinned by the fact that the conifers grow at about 2.5 to 3 times the pace of slower growing broadleaves. Now, it's not to say we're not planting broadleaves. We are planting about 1.5 million broadleaves as part of our 9 million tree planting program. And it's important to have a mix, particularly for sort of climate resilience. But the focus on conifers and commercial tree species is important, and it means that the credits that we're creating are particularly useful for net zero 2050. One of the developments of the fund is that in December last year, we became the first, the London Stock Exchange's first and still only investment company to receive their newly created voluntary carbon market designation. And that is a badge that signifies that the London Stock Exchange has due diligenced our strategy and the types of credits and verified that they are of a high integrity. And as part of that offering, we offer all of our investors, this is mainly focused at corporates and financial investors rather than retail investors, but everyone has the choice to either receive cash dividends from the sale of our voluntary carbon credits, or they can elect to receive them as in-specie dividends. So that we think is going to be very interesting in the future for as companies look to secure their supply of voluntary carbon credits. We look forward to welcoming corporates and investors who would be primarily investing for carbon credit reasons. In terms of the market for these voluntary carbon credits, there is a forecast shortage of them. We've seen a literal exponential increase in companies making science-based net zero pledges. So that's the highest integrity form of net zero pledge. There are over 5,500 companies globally who have made that pledge, and because of that, the forecast demand for credits is due to outstrip the current inventory and the future supply as soon as at some point in 2027. And as a result of this shortness in supply of voluntary carbon credits, there are various forecasts out there, but I don't think I've seen one that forecasts that voluntary carbon credit prices will reduce. And we've presented the range of price forecasts, but it's expected that carbon credit prices will increase somewhere between 7-fold and 31-fold by 2030. So very significant growth in voluntary carbon credits markets is expected. And that's exciting for investors in FSF because we currently have just shy of 150,000 carbon credits on the balance sheet from the 6 forests that we've planted. And when we've planted the remaining 34 forests in the portfolio, we're expecting that number to increase to about 1 million voluntary carbon credits. So we could see some good opportunity for potential upside on the base case, depending on how voluntary carbon markets evolve over the next sort of 5 to 6 years. So just to wrap up, so since FSF IPO'd over 2 years ago, The company has delivered a resilient NAV progression, so it's delivered a 10.6% NAV return in what I think everyone would agree have been pretty volatile market conditions. We've planted 6 new forests that have seen 1.5 million trees planted, and it's that afforestation that continues to be the engine room of our returns, and has so far on those 6 forests delivered a near doubling in value as a result of achieving that planting completion milestone. And what's exciting is that we have a further 34 afforestation properties in development, with many of those targeting planting completion in the spring of 2024. So hopefully that gives people a good overview of the investment company, but I'm very happy to take any questions.
Excellent, and yeah, you'll be pleased to know that some questions were coming through as you were speaking, so we can start to go through those. Now, there's a question here about one of the most common phrases in the presentation, which was the voluntary carbon market. Are there opportunities in the compliance market as well? The questioner seems to imply that would be the logical place to go. So how do those markets differ, and where does the latter fit into your strategy?
Yeah, so just to explain, voluntary carbon markets are entirely voluntary. So when a company says, we're going to become net zero by 2030 or 2050, there's no obligation on that company to do that. They're doing that entirely out of their own free will. And at the moment, voluntary carbon credits can only be used for those voluntary pledges by companies. There is a separate market, the compliance markets. There's the EU ETS, and since Brexit, the UK has a version of this, the UK ETS. Now, these are emissions certificates, effectively. So the government issues highly carbon emitting companies in certain industries with a certain number of certificates against which they're allowed to emit carbon in any given year. If you over emit, those companies have to purchase credits, compliance certificates from companies who have under emitted, and so there is a market for those compliance. At the current time, there is no ability for voluntary carbon credits to be used against those in those compliance markets, but there is some exciting potential for those two markets to merge in the future. There's currently the UK government is actively considering allowing woodland carbon code credits of the sort that we are creating to be used in the UK ETS in time. There's a consultation ongoing about it. There's not been a confirmation about the timeline, if and when that would happen. But what's interesting is that compliance certificates in the EU and the UK trade at significantly higher prices than voluntary carbon credit prices. So if in time woodland carbon code credits were allowed, to enter compliance markets, you would probably expect to see a significant bump to voluntary carbon credit prices because it's got access to all of the demand from compliance markets.
Excellent. And there's a question about technology here, particularly as you look to scale up what you're doing. The questioner points to the US, apparently, where there is automated equipment for harvesting trees to ensure that the timber is competitively priced. How do you assess that question? Are you able to match that technologically, and if not, could that hamper your progression?
Yeah, absolutely. Look, we showed on screen trees being hand planted, and that is how every tree is planted. And at the current time, we're not aware of a technology that can plant trees as reliable as a human. On the harvesting side, it's a completely different equation. These are very substantial trees, sort of a ton in tons plus in weight. And yeah, we do use the latest technologies to harvest and process that timber, and then deliver it to sawmills, who are effectively our customers for onward processing. So I think the harvesting side of the operation, we are using the latest technologies and machinery to process that efficiently.
Excellent. And in terms of how local authorities or central government view this, there's a lot of enthusiasm for net zero, for decarbonisation, etc. But presumably you're also running up against the planning process here, and local, which can be quite cumbersome. Do you find there is local authority, community support for what you're doing?
Yeah, I would say generally there is a huge amount of support for what we are doing. But it is completely understandable that from time to time we do face sort of resistance and have concerns raised to us by local communities. And these rural communities rightly have long memories of the sort of afforestation that was going on in the 70s and 80s in the UK, which was monocultures of sort of unsensitively designed forests on the tops of hilltops that were an eyesore. There was no consultation with communities, and what we're doing is completely different to that. We're very sensitive with our design. We completely voluntarily hold community drop-in days where we present all of our plans for the afforestation scheme, and we listen and take on and accommodate feedback wherever we can. But I think trust will, it's a journey, and we'll need to earn our trust within communities. But I would say generally, and most times, our plans are, there's a lot of support. And we've specifically initiated a whole series of community initiatives with these schemes. So in Bank Farm, which is the first forest that we planted, the community wanted to see some more mountain biking trails, and so we've put in some mountain biking trails that connect to a neighbouring forest. We've put in a car park that's available to the local communities for free to encourage recreational use of the forest. And then there's a whole spectrum of quite, each community initiative is really quite bespoke to that local community and to the piece of land in question. But we have a very long list of community initiatives that we have implemented, something we're very proud of.
Mm-hmm. Excellent. And there's just a question here about your approach to building up the dividend over time. To the extent you have a hard and fast rule, what is the approach to paying out dividend to shareholders versus reinvesting in fresh planting?
Sure. So as I mentioned, and slightly unusually, Foresight Sustainable Forestry is a total return fund. So we do not have a dividend income target. So the plan is to perpetually recycle these waves of afforestation assets that we develop and sell, and then recycle the proceeds into future waves of afforestation. I think the slight nuance to clarify there is that we do offer, from 2030 onwards, we will be offering a dividend from the sale of voluntary carbon credits for those investors who want it. For investors who want those carbon credits in specie, we will be facilitating that as well. And we're waiting to 2030 for several reasons. One is that it takes that amount of time before these first trees have grown sufficiently that we have the credits have changed status into a status capable of being retired. And secondly, to the slide that I presented earlier, we believe that it's in shareholders' interests to retain these voluntary carbon credits on the balance sheet through to the end of this decade, because of this supply and demand, fundamental supply and demand imbalance, and the potential upside from increased carbon credit pricing. So the plan is to retain them on the balance sheet till 2030 and then start distributing from then on.